So today we will start with the partnership first chapter. It is basic concepts we will be discussing. Basic concepts we will be discussing. Concepts. Basic concept means whatever you will learn in this chapter, it will be necessary for further all the full book you will be using all this. So first I am discussing some journal entries and how these journal entries are transferred to the ledger. Usually only these accounts you have to prepare. Journal you need not to prepare, but sometimes you should also know how the journal entries are coming. Okay, so we are starting with the general, that is the basic. First, whatever the profit is earned by the firm, it is transferred to profit and loss account. Means it comes here by PL account, if profit, it comes here. Okay, it comes here. And if it is a loss, then it comes here to PL account, if loss. Okay, maximum it will be there. So what is our journal entry? Journal entry is PL appropriation account, PL account debit, to PL appropriation account, PLA account, to our PLA account. Okay, this is the general. And narration what we will write? Profit transferred. Okay, this entry comes. Hereafter, whatever, this is the debit side and this is our credit side. This is our credit side and this is our debit side. Okay, so whatever the partner will be receivable to partner, CEI, receivable, it comes here. And what is payable by a partner, payable by a partner, that comes here. Okay, so partners usually they get interest on drawing by interest on capital. They get interest on capital. Okay, and their first of all it start with by balance brought down, BD, by balance BD. Some balance will be there in partner's capital account and it comes here because this amount is receivable by the partner. Then interest on capital comes. So for interest balance brought down, there is no journal entry. No journal entry is required for balance. By interest on capital, it means one journal entry comes here, interest on capital account debit, interest on capital account debit to partner's capital account, There may be more than one partner X capital, Y's capital, A's capital, B's capital, C's capital. In this way it can be more. Okay, then this interest on capital account is transferred to PLA account. So what we do? PLA account debit to interest on capital account. If you know the ledger, you can write this journal entry anytime. So it means PLA account is debited to interest on capital, It is an expenditure of the firm to interest on capital. That's why it is a debit. In the other way, we charge interest on the drawings made by the partner. So what we write? To interest on drawings account. To interest on drawings account. So journal entry, how it comes? Capital account debit. Capital account means A's capital, A, then B, then C. In this way it comes. A capital account debit to interest on drawings account. interest on drawings account. Okay, and narration. This interest on drawing, it is a income to the firm. That's why it comes here by partner's capital account, by interest on drawings account, by interest on drawings account. Okay, so one general entry will come here, interest on drawing account debit, interest on drawings account debit to PLA account, to PLA account. This is transfer entry. What we will write? Transfer. Interest on drawing account, transfer entry. This is your transfer entry. And this is your due entry, due entry. This amount is due. This amount is due entry. It is due and it is transfer. Okay, full narration you can write on here, amount transferred, interest on capital account balance transferred to PL account. Like this full narration you will write. Interest on drawings account transferred to PL account. I am just writing transfer means so that you can remember. Hereafter from capital, drawings is also recoverable to drawings account. Whatever drawings partners make, that is also recoverable here. Drawings we recover. Then partner is eligible for various type of salary, remuneration, commission. So these are payable to customer if it is in the partnership deed. So our general entry becomes salary, remuneration or commission, salary, remuneration, commission, whatever is payable to him, commission account, debit to capital account, Capital account again named by, to A's capital, to B's capital, to capital account. And this is your due entry. And this due entry is also transferred to PLA. It means it is an expenditure. So to salary, to A, suppose, remuneration to X. Like this we write salary, commission, all that will come. Salary, commission, remuneration, etc. It comes here. Okay. These are receivable by the partner. Okay. Here, 1 minute, here we'll rub. So hereafter what happens? If this side is, generally this side is higher. So we make a total of this side. First we will make a total of this side. And this total we bring here. This total we bring here. Okay. So some difference comes here. This difference is to profit transferred to capital account, of A, B, C, like this, and total will agree with it. Total will agree with this. Okay. So this and here this also comes. This is also receivable by the partners. So here it comes by PLA account. If profit. If profit you need not to write, just for your knowledge I am writing if profit, if loss. Just otherwise you need not. And in case profit is not there, loss is there. So by loss, here it comes by loss transferred to capital account. Then difference comes here. If. But generally it will not be there. Generally it is always a profit. Okay, because they are doing business for profit purpose only, not for loss purpose. But if loss this side, it is difference is coming. If difference is coming this side, it means it is a loss. And then it is transferred to here, to PLA account, if loss. If it is loss, it comes here. Okay. And then we balance it. Okay. Then we balance it. This side total will be higher. So we put this total to here. And the balance comes here to balance carried down. And it comes carried forward. To balance carried forward. it comes here. Okay, if loss, then it comes here, but you take it as a profit. So if profit comes, it comes here, and loss ABC, like this it happens. Now, and for this also a journal entry is required to profit transfer to capital account. So first due entry will be there, PLA account, PLA account debit. First PLA account debit to partners capital account, to capital account, and this is transfer entry. Transfer. So due entry, no due entry. No due entry is required, only balance profit transferred. Profit is transferred, profit transfer, so no due entry is not required. Only one journal entry is required, because otherwise it will not, your ledger will not match. Only this PL account is debit to capital account. In the capital account, what you will write? By PL account. Okay. So here our journal entry portion of this partnership is over. Now we will, this let it be there. Now we will go with the example question number, numerical question, and question number 1 we will start, and from here onwards whatever the provisions will be coming as per the whatever the concept or provision is coming as per Partnership Act, I will discuss based on the numerical questions, so that easily you can understand and remember what is the use of those rules. Otherwise, if I will go with the rules, it will be not, you may forget also. So I think this PLA and this capital account is in your mind, so I will rub all these things. Okay, I will rub. 1 minute, I will rub it. Okay, now question number 1 of this book. Tripathi and Chauhan are partners in a firm. Who are Tripathi and Chauhan? So capital account, one will be Tripathi and Chauhan. So capital account. Here you have to prepare a capital account. So capital account you have to write. 1 minute. Capital account you have to prepare. Capital account. Okay. So here Tripathi and Chauhan. So 2 partners are there. Okay. You can write it like this. Tripathi and Chauhan. 2 partners are there. Tripathi, and of course this is a ledger. It is a ledger. So debit side and credit side, and here you will have date, particulars, then journal folio. Like this, all column will be there, but every time I am not going to make. Okay, this date, particulars, these columns will be all, of course, there, because it is a ledger. But these generally we will write particular and the partner's capital account. Okay. So here their capital were on 8 April 2019. April 1 by balance brought forward by balance brought forward. Brought forward is 60,000 and 40,000. 60,000 and 40,000. Here, first question, I will tell you that partner's capital can be of 2 types. First is fixed capital, and other is fluctuating capital. Fluctuating capital. 2 types of capital accounts: fixed capital account, and this fluctuating capital account. You may be required to do this thing. So first here we will talk about the fixed capital account, and when fixed capital account is there, you have to make another account, current account. CURRENT. current account of each partner. These two accounts are in system 1, and if fluctuating capital, both these merge here, means fixed capital entries will also come and current account entries will also come here. Like I have shown that capital account here, journal entries, while doing the ledger I have made journal, I have made a current ledger. So that was fluctuating capital. Now I am talking about fixed capital and current capital. If capital is fixed, it means in the capital account only what entries will be there? Entries will be there balance, then new capital given by the partner, or capital withdrawn. Only these three entries comes here. Other entries will not come in the whatever I have shown in the capital account, in the fluctuating capital. All entries will come in the current account. So capital account and fixed if we are taking. Fixed we are taking means here only two is possible. Buy cash if new. If I am telling you here in the question during the year, here nothing is there. If new is there, then if new cash, new capital is given, then it comes here. In the question it is not there. This is only possible. And here two so here what else comes? Here two bank account, cash or bank account, two bank account. Here it comes only when withdrawn. When withdrawn capital, not drawings. When withdrawn, drawings does not come here. And the balance carried forward. This is your fixed capital pro forma. And in the question, as this is not given, these are not given, so balance will be 60,000 and 40,000. And 60,000 here we will write, and 40,000 here. 60,000 and 40,000 we will write, and this balance comes here by balance brought forward. Again we will write this 60,000 and 40,000, and this ledger is your over. Capital account ledger is over. Not talking about the current account. Current account we are talking. Current account, CURRENT. Current account. Current account means whatever the transaction has taken place regarding distribution of profit, this comes here. So here also balance can be T and C, and here also T and C. By balance brought forward, some balance will be there. And here if it is balance, and if it is overdrawn, debit means overdrawn. So to balance brought forward, if overdrawn, if debit or overdrawn, then only it comes here. Okay, so in the question we are going. Okay. During the year they earned a profit of 30,000. 30,000 rupees profit they have earned. So this is over. Profit during the year they earned profit 30,000 they have earned. Okay, they have earned 30,000. So one ruling, it is clear. Okay. Then both are entitled. Their profit salary they are entitled. Of 1,000 per month. 1,000 per month as per the deed. If in the deed anything is there, it will come here as per the salary. And interest, 5% interest on capital. 5%. And their capital is here 60 and 40,000 capital on their capital. They are also to be charged interest 5% on drawing. Interest on drawings 5%, and their respective and irrespective of the period, 5% is charged, and which is 12,000 for Tripathi and 8,000. So here this entry, because here no current account debit balance is there, I am just removing it. Okay, just to inform, just to tell you, I have drawn. So balance brought forward here, old balance is also they have not given. That's why this entry is also not recorded, because they have not, in the question they have not mentioned. But if mentioned, it comes here. Okay. So Tripathi and these are the two partners. So they have withdrawn two drawings account. They have withdrawn 12,000 for Tripathi, and Tripathi has withdrawn 12,000 and Chauhan has withdrawn 8,000. Okay, and they has to pay interest on drawing, to interest on drawings account. So 12 पंजे 60, 600, 8 पंजे 40 and 400 रुपए they have to 400 they has to pay as a interest at the rate of 5% irrespective of the date, and interest on capital they are entitled 5% by interest on capital, by interest on capital. In short, you can also write by interest on capital 60,000 3,000 and 4 पंजे 2,000 is their interest on capital that they are entitled. And this is and now salary per month, 1,000 rupees salary by salary, 12,000 and 12,000. Okay. 12 पंजे per month as salary. Both the partners are entitled to 1,000 per month as salary and 5% interest on capital and 5% irrespective of the period. Okay. So and hereafter they will get the part of the profit. So by profit, by PLA account, it will come by PLA account. Okay, sir. So PLA you have to prepare PLA account balance by PL account by PL account. 30,000 rupees will be transferred here first. Okay. Then these expenses we have to write to salary. T and C. T is 12,000 and C is also 12,000. So 24,000 will come here, outer column. 24,000 will come. Then interest on capital to interest on capital T and C 3,000 and 2,000. So it is 5,000 coming. Then drawings interest, by interest on drawings. This I have discussed just before. So how these entries are coming? 600. Oh, it will come 1,000. T 600 and C 400. Okay, so this is over 31,000. This total comes here 31,000. So it will be divided among to profit transferred to capital account, to transfer to T and C. 5 4 9 और 2 11 का एक हाथ में 2 1 5 और 4 9 9 और 2 11 का एक हाथ में 2 और 1 3. So if in the question nothing is given ki how they are sharing their profits, it means they will share their profit equally. But here in the question their ratio is 3:2. Ratio 3:2 is given. So we will divide it in 3:2. By 5 we will divide. So 1,200 one person will get and one will get 800 rupees. Okay. So it will come 1,200 and 800. Okay. So this total is higher. 3 200, 3 5 और 1 से 16,200 and this side it comes 2 और 2 4 it's 14,000. So this total will come here 16,200 and 14,800 comes here. Now the balance is 4 और 4 8, 4 4 8 8 से 14, and here it comes to 6 and 6 2, 6 and 6 2, 1 2 3 3 और 3 6, so 3600 and 6400 and cap. So it is your fixed capital and it is their current account. Current account means whatever the comes in the fluctuating account. In fluctuating account, balance will be there, this cash, this 1 or 2, these 2 entries will be there, and all these entries will be there if it is a fluctuating capital, and if it is a fixed capital, all will come here. So in this way, our I think one portion is over, where you have learnt if ratio is given, it is as per ratio. If ratio is not given, equally given. When capital is fixed, how fixed capital, only 3 entries come here. 2 entries is possible, here only 1 entry is possible. Rest all the entries comes here. Whatever is receivable by a partner, it comes here. These are the receivable, and whatever is due from him, deductible from him, it comes to the debit side. It is your credit side. Credit side means income side of the profit and loss account. It is debit side means expenditure side of the profit and loss account. So with this over, now we will discuss the next question.